A very good morning to everyone, and welcome to the TriggerCharts pre-market rundown for Friday, August 6th, 2021. Hey, I'm Andrew Horowitz. I'm the co-founder of TriggerCharts, and you are traders hopefully making a lot of money with the TriggerCharts indicators that we have available on the TradeStation trading app store. Before we do anything, you know what we have to do. Of course, we have to mention that this is all for educational purposes only. Investing, of course, involves a large degree of risk where you could lose money, and past performance is not a guarantee of future results. Everything that we talk about today is really designed to give you insight and information on how we see the markets and how we've designed these indicators to be guides, helpers, and assist you in raising your confidence in making these trades. So hopefully you are learning a lot from these. We have a nice size group with us today. All of the things that we talk about and in these particular webinars are available for replay over on our YouTube channel as well as on TriggerCharts.com. Let's take a quick check of where we are in the markets. Looking at the Dow Jones Industrial Average Futures up about 106, start to ramp up a little bit more than they were. The ES, or the S&P 500 futures, up 2. The NASDAQ down 60. Kind of what we've been seeing lately is either the day favors the Dow or the day favors the NASDAQ. And somewhere in between all that is the S&P 500. Seeing gold take a little bit of hit on the noggin. Same thing with silver, as the dollar is coming up pretty strong due to the fact that we saw a very impressive jobs report. One of the things that we saw this morning was a 5.4% overall jobs or unemployment rate, upwards of I think it was more than 950,000 new jobs added to the payrolls. What that does, it puts pressure on the bond yields. In other words, yields have been dropping very significantly over the last number of days due to the fact that there's concern over the Delta variant and the spread of the pandemic and the increase in the virus count and cases and hospitalizations and all the things that we've been seeing about. Unfortunately, it's either Olympics on the news or COVID. That's kind of your two choices. You got the Olympic channel or the COVID channel, it seems. So right now what we're seeing is that in the face of all of this, as bond yields on the 10-year hit 1.12 down to mark its low level in recent past, bounced off it on Wednesday into Thursday, and today screaming higher. So what's interesting about that is we are seeing that there is a significant bid on the bond side into this, and then a sell-off dramatically where a lot of people were wrong-sided. That's also doing a number on the dollar, which is screaming higher, which is then again is suggesting that, hey, you know what, with this great jobs number, 5.4%, and even if there's some wonkiness in the calculation, what we're seeing is that, possibly, maybe, I'm not so sure, could it be the Fed is possibly back in play, looking at an exit from maybe some of their bond purchases and maybe even starting to think about raising rates. Anyway, one of the big things that we see over the weekend I want to mention to you, and what we've been looking at, is the squeeze action is back. When I talk about the word retail traders, let's not look at that as anything more than a block, a group of possible, trading bandits in a way that are looking to gather a nice profit on some kind of group action. And it's not a derogatory statement anyway. It's just kind of like looking at one area versus the other. So you have the institutional traders, you have the retail traders, you have maybe professional traders, you have market timers, you have all these, algos. Well, right now we saw that the squeeze action is back. If you didn't notice, we saw that the Robinhood shares that came public this week moved up about 100% over a couple of days. Now, it could be argued that that was done and created by a major options action move where they buy way out of the money calls and drive the price up, and the call sellers need to cover their shares, which drive the price up even further. And who knows, maybe there was some very fancy pants insiders that knew that embedded inside of their prospectus was a little phraseology, a little line that said, if in fact we see that there is actually a move above 100%, or if the stock moves up 100% over a certain amount of time, and when it stays there, well, we are going to be able to unlock like 97 million shares for trading by insiders. So that did happen, and we saw the next day that Robinhood did, in fact, come out with an announcement that there was this big share offering. Stock was down 27% yesterday. Now, of course, on TV and radio and media, everybody's like, did the retail investor just get screwed by the insiders? The retail investors jumped the price up. So let's not get crazy about that. I'm not sure if you were in on that action. Very tough to move in on that when it's getting halted, moving around pretty significantly. But we're seeing that also. We're seeing some strange action today, for example, initially on the print of AMC Networks that came out with a really good number, which is different than AMC Entertainment, which is the meme stock that we know about. And that stock got a bid because of the better than expected earnings on AMC Networks. AMCX versus AMC. You got to be careful when we're looking at the news and what's happening and making a quick move. One of the things that we teach you here is, hey, let's take a moment, let's take a breath, let's look at what the trade is, let's get high confidence on it before we get into it, right? Well, technicals are all the rage right now. If you look at charts, I can show you chart after chart after chart that shows that we are hitting things even as mundane as 50, 100, 150, and 200-day moving averages. We are clearly seeing that very good support is being supported. We're seeing that resistance is being held. And it's a very strange environment where it's so almost exacting. And that environment tells me that nobody really cares about the fundamentals right now. And that's fine. We'll see a rotation. We'll see a cycle back to that one day. But what we are seeing is now that something very powerful for trading tools and for traders. So hopefully you're taking advantage of this. Now, before I forget, let me mention two things. Number one, if you have any stocks or symbols or futures or whatever it is that you want to be reviewed, why don't you do me a favor and put it all over in the chat? I'll also mention that if you are a new subscriber, only new subscribers to the Commander Series, which we're going to look at in a second on the screen, you get a 4-hour Traders Playbook, which is a coaching session, which is normally $199, and it's all yours for free. Take it as your leisure. Look at it, review it, look at it again, go back to it. It's an evergreen style. It doesn't matter when it was done. It's all about the concept and theories behind market profiles, which is you're looking at right there, and everything that we talk about at volume, at price, which is so important because it gives us a really good insight into actually what traders, investors, retail, institutional are doing when it comes to a symbol. Are they accumulating at the level of support? Where are the breakout points? Where is there no resistance? Done in a much different way. You can see on the screen on the right, what we're looking at here is very simply color-coded: red, cyan, and green. Those three levels that you're looking at, right? Very simple. You got this. Those three levels are all very significant when we look at charts. We look at how wide they are, extremely wide charts here. We look when they narrow up, get a little bit narrower, right? And look at where those levels of breakout. Right now, for example, the IWM 224 and change starting to break out above a level. Well, next stop, 226 is probably where we're going to be. A lot of other ways to look at this, but very simplistic at the same time, so that there is an opportunity for you to very quickly make a decision with a high confidence level on the trades. So the Robinhood and the IPOs, we've seen any IPO that's come out, we've seen huge moves post-IPO. Well, we saw that on Traeger recently, which is, if you know me, that's my favorite grill to actually do some smoking on. It's a pellet grill. They have a great selection, great following, almost a cult following. But what we're seeing is huge moves post-IPO, specifically with Robinhood, big short squeeze, but really, again, not so much a short squeeze because you can't really do that much of a short squeeze that close to the IPO when there's not a lot of short shares really outstanding. But you could do a call option squeeze of what happened. So we saw a solid action in this area in IPOs. Lots of names coming out into the market. Massive inventory coming out into the market, taking over, but yet at the same time being absorbed unbelievably, not really wrecking the rest of the markets, which tells you something. It tells you that there is an incredible amount of liquidity in the markets. If you see this much IPO and new shares come out into the market, if you see companies that are issuing shares and it really doesn't rock the boat too much because it's being absorbed so quickly, there is a gigantic, enormous, dry sponge, and the share offerings of water that's just being sucked right up. And there's no waste. You're not seeing that money's not going into other areas. So this is kind of an interesting phenomena that we're seeing right now and why it's so important to look at technicals because, again, once again, it's all about where the money is flowing. And if you think about one thing about what that means is this. If we're looking at where money is flowing, how do we quantify that? We quantify that with utilizing the amount of money that's placed in a buy or a sell at any level and price. So that is very simply the volume calculation on trades at a price to give us that answer, which is everything that this is built on. The TriggerCharts Commander Series, the indicators that we utilize are all built on the theories of Peter Stottlemyre and market profile and the efficient market theory, which is all, not the efficient market theory, the auction market theory, sorry, I don't know where that came from, the auction market theory, where you are, definitely not efficient market theory, the auction market theory, and the idea that there is a level that will be significant for buyers and sellers. All right, let's move on. Themes, economic backdrop. Well, the narratives have been all about peak earnings, peak eco, peak valuations. We saw that earnings are coming in pretty strong for some of the big companies. I mean, pretty substantial. You know, when a company is expected to make 42 cents a share but makes $1.72, it's like, what? What happened there? How are the analysts so far off? Eco, you know, we saw today, top end of the range in terms of employment. The ISM that came out this week, the ISM services, was at a historical high. Valuations still coming in a little bit due to the fact that earnings have fit back into price. But what we're seeing is at the same time that a lot of valuations are still pretty strong. So this narrative of peak, we have to look at that, think about it, put it in the back of our heads and wonder maybe that's something to think about. Economic outlook mix, clearly, seeing a few things in the housing market that's not as good as others. Factory orders good. Kind of a bit of a mixed bag. Still, Fed's still in play. Okay, barbecue wars are out there. The Traeger IPO is firing up. The Weber IPO is smoking. I think it's up 10% today, this day after it came public. Barbecue guys IPO is warming up in the background. Like how I did that? See that? See how I did that? The barbecue guys, $990 million for just a website that directs people about what barbecues and what smokers to buy. The boosters also seeing a big move in Pfizer, Moderna, BioNTech. These are companies that are looking at the booster shots that are now being talked about and expressly thought about as an absolute, even though the WHO said, hey, guys, you guys in the developing countries that already have your vaccines, can you do us a favor? Before you get a vaccine booster, your secondary or third shot, can you do us a favor and give some of those vaccine vials to countries in the emerging markets and developing world that didn't have it yet? Maybe that would be something you could do. Interesting. Well, Germany and France said, no, sorry, we're doing the boosters. We're keeping them in-house, and we're doing them right here. Kind of an interesting situation if you think that the whole world really has to get beyond this pandemic before we really solve the problems locally. Earnings, lots of pain on the print. I mean, one of the things we saw was the pandemic winners reverse. You know, your Etsy's, your Pinterest, some other companies that were real winners into the pandemic. They're kind of like, all right, maybe we don't need the mask. Maybe we don't need to visit Pinterest anymore. Etsy, maybe not also. We're going back to the tried and true. The other thing is that we saw that even with good numbers out of the print on some of the technology companies, aside from Google, they really kind of came in a little bit. In the economic front, we got the housing market slowing, employment mixed, but yet better today. We saw a good number yesterday on the initial claims. The private number that we saw from ADP on Wednesday was not so great. ISM services to a record high, and then today's numbers. Next week, more look further into the CPI, PPI, import and export prices. Of course, I mentioned our 4-hour online coaching program. We're going to look at these stocks. So what I'm going to show you right now, two things. Let's take a look at the KRI where we are right now. KRI is a +2, I believe, or plus +1 right now. Sorry, +1. Right in the bottom, we're seeing that. And when we see that level, what are we finding? That not that bad of a situation. Probably whatever trend was in place, which right now, kind of a bit of a cup and handle, but more of an uptrend, right? I would consider this generally a consolidation towards a bid to the up, not down, right? We're definitely seeing this move up longer term, and shorter term consolidation towards the upside. May see a bit of a track down a little bit today. But means that really nothing to be too worried about. When we start to see these numbers over here getting too hot, you got to worry that you're going to see kind of a move lower over the next few days. Right now, nothing really specific, nothing to get worried about. Kind of back and forth action is what we're seeing. That's the KRI, does one thing and one thing only. All it does is look at one. Actually, there's no settings you could do. There's no stocks to include. Nothing there. That's interesting. A lot of holes right here. Well, nothingness. All right, let's take a look. We got DD. DD, has been under pressure. We looked at a couple of different levels of DD, up about 5% this morning on the fact that there is, in fact, looking at the opportunity for the company to maybe give up control of their data so that they can get back in the game. One of the themes that I'm looking at over the last number of days is this whole idea that, if companies could do one thing right, and that's all it depends on what happens with the stock, one thing, where are those companies, what are those companies? Did some research, found out a few of those that were kind of those that I thought would benefit. DD being one of them, really not playing great. I mean, yes, came off the lows pretty nicely, been consolidating this week back towards that low point, really didn't get below any significant level that, you had to be too concerned about. And right now, trading up about almost 5%. We'll see how this plays out. BioNTech, just what a beautiful chart. If you would have just tracked the daily, what we're looking at here is the daily chart. What we're seeing is very simply, right? What we're looking at is just the color coding. And don't even look at the bottom here. We're going to actually take that off for a second. Let's take off. Well, let's leave it on right now, I guess, because it's on the top here, on the bottom. Well, let's not pay attention to this for the moment. All right, let's make it smaller. If you just look at this chart right here, how many opportunities did you have to actually get into the stock or move into it when it held? One of the things you saw different than we look at the IWM a second ago, I'll bring that back up, these wide levels, even if we kind of extend it out, these really wide levels, ranges, big ranges, choppy action. Look at how tight this has been. We finally launched off of that level, right? That 229, currently trading at what? Almost $400? There was like a nothing above, and let's just get it on. Let's get it going. That's what this was saying. You also had a bit of what we call a banger set up here where you hit the bottom, didn't really break down, couldn't break down below the bottom right here. Now I'll make this bigger, actually. Couldn't break down too much below the bottom. Held the support very nicely. Really tight lines between your cyan and your green. Very important when you look at where things are and consider the fact that that means there's a double benefit of support. Like the support is really strong. Kind of like double reinforced support. Look at it that way. When you have multiple colors that are that close to each other or even overlapping, even better. Sometimes these overlap. Well, you saw that we kind of came up from below. We saw that this level was really overdone right here. Held support, launched to the positive side of the aileron. The aileron is an add-on. I really highly recommend this because it gives you one more data point and confidence level. And then you just launched above this and you haven't turned back since. BioNTech, which is the partner for Pfizer in the vaccine that they put out. Pfizer not doing as well. It's doing well, but not, as well as that. You went from 40 to 45. But again, same general pattern, really couldn't break down. Look at Moderna. This stock has been on fire. We've been talking about this forever. Not a chance that there was any kind of blowback on the momentum. Everything is green here. So you combine all this, you step. It's like a stair step on the above. Now, right now, we're a bit overdone, down about 1.72%. Earnings came out this week. They beat, of course. What do you expect on this kind of company that's supplying the world with the vaccine? They also came out with some new news about the booster against the Delta variant. That was something. But stock is kind of being wonky. It was traded down to about 392 or so yesterday, I guess, pre-market. Traded as high as 440 yesterday, all-time high. Right now consolidating back after that parabolic move up. But really, if you just focus on the green, and for those of you that don't understand what I'm telling you right here, all of you that do subscribe or do a trial over on the Trading Store app over at TradeStation, there is an instruction manual, tells you what it means. It gives you exact details of what everything that I'm discussing is. What does it mean when it's tight, when it's wide, when you have green versus what is an orange? Look at that orange right here. All right, let's look at Hood. Up big today after a major crushing blow. I mean, this stock was halted. It moved up. This is Robinhood. They're trying to get inside again, trying to ramp this thing after getting obliterated yesterday. Gap filled. Not something that I really would play with personally. It just is a little bit rough. Hood is one thing, but Workhorse the other. Flatlining, not doing anything. We're not seeing anything good here right now. This is why if just one thing goes right, just one thing goes right, you can have a great opportunity here. Holding on support within a range pretty well, down a couple of cents today, nothing really moving. It needs to get a catalyst, and we need to see a major catalyst to move this thing up. We did see that move off of the $8 range up to the $19 range last month or the month before, and all they have to do, quote unquote, all they have to do is get themselves the contract for the Postal Service. Weber talked about this, currently trading up a little bit, 11% in, where is it now? It's all the way up here somewhere. I don't know why it's not coming up here. I don't know. I don't know why it's not setting. Let's see here. I don't know. Seems to be right, the range. But it's trading all the way up here somewhere, 1840. This is the Weber that came out yesterday. Cook. You see this moving up very nicely as well. Everybody is thinking that, hey, you know what? With the Delta variant, maybe people are going to be barbecuing some more. Etsy dropped off a cliff yesterday. Again, a pretty ugly pattern overall. This is kind of like one of those no-touch because you can see that there's in and out on the aileron. But more importantly, you saw a consolidation, a breakout, a consolidation, really wide consolidation here. Again, I'm moving kind of fast. We only have a certain amount of time in the morning. Tight consolidation, wide consolidation, getting a little bit tighter, but couldn't hold into earnings, dropping below over here. Just not a pretty chart. It's almost like, look at these waterfalls, all these waterfalls that happened here. Not a chart that really I'd be playing on the long side for any significant amount. ASTR, another stock that is in the space race, a SPAC that's converted over, that is in the running for satellite distribution. Big move off the bottom. One of the things you see, this is the kind of technicals I'm talking about, where it's kind of like can't really get rocked below a line. It's been sitting there for a while, not doing anything. Then all of a sudden one day it comes in. It was up 20-something% yesterday, upwards of 35% at the top yesterday. Got a good call in the morning on the 60-minute. You probably can change this over to a 30-minute if you want to tighten this up a little bit. You got this call in the morning, right off. These are the kind of things you got to be careful about how fast you trade it. But if you got the call somewhere in the 5, got out about the 10 and change, doubled up your money yesterday, went into this short overnight, again, with that kind of momentum. Not necessarily think that it's a good idea to short this overnight, but that was kind of interesting. Fiverr, another one of these, fall from grace kind of names. I don't even know how this got to $320 per share back last, just a few months ago in March. Then you consolidated, wonky around, kind of a lot of ups and downs, big movement. Got a nice move off the 169 back up to 251. I think this is kind of like, it looks like a thinly traded, just not really interesting kind of name. Datadog had a good day yesterday, all-time high on this. Some of the cloud names really did well. Another one is Asana, breaking out to all-time highs. This is a nice chart. This is a lovely chart. Everything about this chart is just lovely, isn't it? Look at that. I mean, you got a couple of days that spooked you out over here, but look at this, the momentum indicator. The aileron is just nicely positive. One little dipsy doodle over here, but generally speaking, you got in, you got out, but then you got back, right back in, then you got out over here, then you got stayed outside. Point is, you see a lot of green. Same thing probably with some of the other names in that space. GM, interestingly enough, I mean, this peaked out at 64 and just like nowhere, all of a sudden, down at 54. It's a $10 move. That's like 12% recently. Good earnings came out, but yet there's some concern over supply constraints, etc. Stock came down after initial pop in the pre-market and after hours, 58 down to 52. Is this a buy? Well, I got to tell you something. This is an ugly looking chart right now. Now, long term, it looks fantastic, from the low. But let's got to get rid of that. Let's start right about here. What is that, 11? So let's kind of go right here. Right here. I mean, the stock definitely had its up. It's one up that was really amazing. Wow, 40 to 55. Consolidated. What you do is, kind of draw some boxes around that. We're talking about this giant consolidation area right there. Didn't do anything. Dropped right back to the consolidation. Remember I told you that technicals are really important right now? Dropped right back into that consolidation zone. Question is, will it break? It's got to really hold this 52 line, which is that last, when we look at this chart, well, what do? I've told you this 100 times. We look left. We always look left, right? So I think that's really important when we look at that is we look left. I should probably leave this on the chart here, right? Always look left. So bottom line is when we look left in here, there's nothing in this range. Kind of move this down here. Let's go back to that. Hello? Why can't I grab it? There we go. Take a look at that range. About the same distance, actually. That's an area you need to be concerned about, moving back against that gap. Do I think that's going to happen? Well, and I think that the cars they're making, things that are happening, the price that they're getting, which is much over sticker on some situations. Margins are a lot better. I don't know. It doesn't seem like it's going to get down that far. It could be an interesting place if we do stabilize in this area right here at the 5480 line or somewhere, which is where it's trading right now. This is an interesting possible move here. I'm not really a fan of what's going on with this, although there could be some short squeezing going on. We think that possibility is this to break down below the 76, move to about 70. But right now, this is all about, defined point that if you get back to 85 or so and it does break out, actually more than 85, about, I would say 87 is a level, but more so really to the top at 90. That's a problem you need to get out if you're thinking about shorting this. Momentum has been slowing down dramatically. We saw this really recent pop as the reopenings, got better, some concern. Then they got better in the summer months. Kind of after that, maybe a concern. K-Web is the Chinese crane internet ETF. Took a beating. Something to look at. Uber. I don't know. Look at a lot of momentum to the downside. Nothing good here. Tried to pop up. 43, $45 is your overhead resistance. Really 45 and a quarter. Somebody's asked me about MP. Let's take a look at that real quick. MP Materials. I believe this was a SPAC originally too. MP Materials looks like it really needs to kind of clear this 39.50, which is a little bit far from here. A couple more bucks. 39.50, you can have a nice squeeze up, probably to 44.45 area. But that momentum's got to come up. This looks like a stock that just gets some momentum and fades out pretty well. Let's take a look real quick at our movers. Anything interesting? Switch. What is here? Anything else? Groupon up 13%. Weber still moving up 13% now. Robinhood Markets up 11%. RCI Hospitality up 10%. Anything on the downside? Novanex did put out a position piece after all this excitement that they're going to pull their, I don't even understand. They're going to pull their request for emergency use authorization. I understand that. FireEye down 12.5%. Another serial disappointer. Let's take a look at this one's another one. Fastly. I mean, there was a great move off the bottom yesterday. People are kind of, I think, fed up with this stock. This stock had some outages, caused some problems in the internet area, distribution, etc. Real problems overall. But, when I look at this, the other one was, I think Space was up today. Did we do this one? Space is up a little bit after it boosted their pricing for, I think, $450,000 to travel to space. Wow. What else we got on the downside today? Anything interesting that you can see for a bounce, maybe? Trupanion. The stock is trading down about 10%, 104. Probably right about there. Yep, 104 range. Right, again, on support, I told you how important it is right now to pay attention to these lines because it's really what's driving everything dramatically, especially for the more seasoned. Yelp, let's see what Yelp's doing here. Yelp hit his line here. Let's take off this radar. We're going to take the radar off for a second just to take a look at this and move this a little bit. Take off. Yeah, drop down. Currently trading up nicely. Still in that range. Nothing exciting about that. Same thing with Groupon, probably on the Yelp numbers there. All right, we're going to end it right now. Hey, thanks for joining me. Make sure to be a part of this by going over to TriggerCharts.com and also over to the TradeStation Trading App Store. Let's get you making some money. That's what this is all about. Thanks so much. I'll see you again next week.